All right, what's going on, everybody? CPI day. It was an eventful one, that's for sure. We'll get into it. We'll recap some stuff. We'll get back to looking at some names going forward and kind of examine where we are. KD is going to be hopping on with me as well. We got bank earnings tomorrow, and he has some thoughts on that as well. I also shared the link to anybody who's in the group who wants to come up, and if you have any questions specifically or anything like that, that would be great. If you could in the chat right now, just let me know you guys can hear me before I get started here. I've had it happen before. Yes. Okay, cool. I see some comments already. What's up, James? And then Gene Albane. Hey man, can you go over what you mean by adjusted versus non-adjusted charts? Yeah, sure. I could do that for sure. So that's on the list. I also want to go over breakers. I had a couple people ask me about those. So we could take a look at that as well. That is just a type of setup that you might see throughout the day. And something that, of course, after I show you, it's great if you would be able to go back on your own and check it out so you can see for yourself. So, last night we did a stream as well. Things kind of went to plan, I guess you could say. I mean, it really was a whole lot of nothing ultimately if you were to look at the big board for today. But the fact that on Wednesday we actually, hi Suki, what's up, Mohammed? Yeah, roller coaster day today, absolutely, yeah. So if we were to kind of just go back and look from what we saw on Wednesday, where we had that bullish that move higher that actually negated a bearish imbalance from forming on the weekly. That's actually pretty encouraging for the bulls. So while I'm not so sure we're out of the woods completely, I think it's worth at least taking a look at where we currently stand. So I'm going to just share my screen, and I think you guys should be able to see this now. Hold on, let me just take off that image. Great. Okay, so now you guys should be able to see my chart. And you'll notice, actually, right off the bat, you're going to notice that I have this black box here. So anytime that you're looking at my charts and you see that I have a black box on there, that will be your breaker, right? And I'll show you what it looks like, and it looks even more clear on a smaller time frame here. So what a breaker looks like is a low, high, lower low, and upon breaking that high right here, you'll notice that so far so good. We've held that level as support even into where we currently sit on the indices right now. And this is obviously futures, so we're seeing price action move. We are currently down on futures just a tad, so this is actually something that I would keep an eye on right there. That's a bearish fair value gap. We'll come back to that later. But that's currently where we're at in terms of futures right now. But I do want to take a look over here at we'll go through the higher time frame stuff, of course, but if you want to take a look quickly, we'll look at the hourly. And something that's interesting with the hourly, you'll notice where I have my range set right now, right? What was the price run to take out this high right here from this low to this high, right? So at the time, right, I have my range set like this, and you'll notice there's no 50% retracement whatsoever, right? And we make another high. So with that other high, to me, the range just isn't set yet. So even when we get that run up overnight into data drop, right, you'll notice that all the way until our high, even this, right, this move right here, okay, we finally get down into discount. And what happens after we get into discount happens at about noon for our little lunchtime run. Swept this low, got into discount, bullish fair value gap on the hourly, and we take off, creating an imbalance to the upside here at 1 o'clock as well. We did fizzle out just a bit, and when we go to a smaller time frame, I could show you exactly where that occurred. I mean, here you can make your case that this bearish order block had something to do with it, but when you look at the 15-minute, it's going to make a lot more sense. So here we are retracing back down into this bullish imbalance that we formed right over here at 1 o'clock, and that's currently where we sit. So that's really where we're at in terms of the hourly and just how we can justify the moves that occurred today. Of course, it was a huge, a really roller coaster type day, like Mo had mentioned before. But ultimately, to me, I think we can justify these moves all throughout the day pretty well. So that's that. But if we were to go back and look, and I just want to show you where this rejection took place, because I was actually in the trade at the time. So, and I was long. So I actually have a video of it. I just have to edit it. I didn't get a chance. I wanted to play some Fortnite. So, but if you take a look here at our 15-minute time frame, I took my entry off of the breaker here. So after we swept that high, I took the entry off of here. Again, this falls into the 10% of trades where I don't use my model. I do have a pretty strict regimented model, but I did like the breaker here, and I liked our potential for, that reversal specifically on a CPI type day. So, it might not look like all that much, but guess what? From that breaker high at 927 to where I got out of it, 976, let's say 77 just for, that's 50 points. 50 points on NASDAQ is $1,000. That's one contract, right? So where did I have my stop set? I had my stop set below this. This is a bullish fair value gap here. I didn't want to see it go below there. I know we had another one towards the bottom of the breaker, but at that point, with the size of the range that we had, that's like 30 points that I would have been eating. That's $600, and I didn't want to do that. So I just, had my order set here, whatever the risk reward was, great. I actually was aiming for these highs of the day, which obviously we didn't get to today. And you'll notice, look, there's a 15-minute bearish fair value gap right here. And when we were talking about this in the group, actually, somebody had made the point that, the RR here it's pretty good for a short. And, while I didn't take the short and I was actually currently long, what I was looking for is, I, kind of put myself in the shoes of on the inverse of the trade, right? If I was taking this trade, right, off of this imbalance, my stop loss wouldn't be until above this high right here, right? I used the high of the candle that created the imbalance move, or the imbalance candle, right, as my stop out. So the fact that even on this run right here, once I saw we came back and closed in here, all I wanted to see was an initial move up above here. We didn't get it, obviously, and that's when I just, took my profits, and that was it, and I was done. But you know, it is what it is. I missed so many good moves today. And we can, kind of go through them. Even this move here, check this, ready? So look, obviously we knew our range at that time. There's our imbalance. Well, here's our first one, really. I mean, there's a bearish fair value gap right there, right? This happened pre-market. So if you're not charting indices using the futures tickers, I think, it might be worth taking a look, because you'll notice bing, bing, dump. Okay. Following that, once we get that down move that took out our most recent lows, we can look at it from the perspective of my model, but the inverse of it, right? And again, here's a recurring theme today on a day like CPI. When you get that type of volatility, one, you don't have to trade it, right? Nobody's forcing you to trade anything. So that's one way to look at it. But the other is, with the enhanced volatility, one, you're probably going to have a pretty big range. And two, these wicks, the wicks are outrageous, right? So for example, if, typically where I look to add positions, or, in this situation, a short, it would have been at the CE of this bearish fair value gap. And I remember when market was opening, that's kind of where I was at, right? And this was at 16,985, right? Look at the high of this wick. 985 to 40, that's 60 points. That's $1,200 I would have been in the hole on this trade, because in this situation, my stop wouldn't have been above that high, right? The high of the candle that creates the imbalance down. So in this situation here, that's kind of why I shied away. And I mean, look, the move was huge. Just look at it from this point of view. This was, what did we say it was? 85, the midpoint of this imbalance. Yeah, about 85 to our low, which, our target really would be here. That in itself is almost 100 points. That's almost 2 Gs. So I'd, 1 to 2. But the thing in that situation was, again, the wick, that's dangerous. And that's a CPI type wick. I also don't really love trading before 10 a.m. So that didn't help me either. But even from this point, okay, Mando model complete. Let's look to our next one. Ready? So we go from the high to the low that took out our most recent low. There's our down move. And look, you're going to notice this. Ready? There's a retracement. No discount retest. So to me, at this point, the range isn't set, which is very unfortunate. I had my order all set. I was showing people actually what my idea was, and unfortunately, we rejected the bearish fair value gap right here. See that? To the absolute tick. I just want to zoom in so you guys can see. Right there it is, to the exact tick of that imbalance, and rejects lower. Now, again, my model is complete, but the difference here is we never got to 50%, and to me, there was no entry. So I had my order set for a discount bearish imbalance right here. Never got to it. It is what it is. So I'm really striking out here today. Nothing, right? But the fact that we didn't get to 50%, that's when I got to change my idea of what the range could be, right? Because we never got to 50%. And this is currently where we're sitting at, right? If we look, and let me just, for now, just show you guys with that off. So here's our range from high to low, right? This bounce never got us to 50%. I'm not interested in that. Okay. We get our bounce, create the breaker right up into our discount bearish fair value gap. And from there, not much of anything really, just a choppy move. But the thing is here with this breaker, typically when breakers form, those are pretty encouraging. Now, if we were to just zoom out and look at how big our range really is, and this is something that I'm torn on, and I got to be real, I don't really know how this could possibly shake out. So if you remembered back on Monday, so where are we? Where's Monday? Okay, yeah. So let me zoom in here. On Monday, you'll notice, okay, what was the start of the price run that took out our most, our initial high, I guess you could say, right? And it wasn't until this one, from this low to that high, okay? You'll notice when we got our retracement, another situation, no 50% retracement on this, and we take off again. So to me, the range ain't set. And if the range ain't set, I got to keep on moving until we get some sort of discount retracement, right? This doesn't count, okay, right? Because look, again, we never got the discount here. And then this price run comes out and takes out another high. So I'm not using this price run immediately, I guess you could say, right? And as we continue, you notice, obviously, we do not get to 50% really ever here, right? Still haven't. okay? And this is the high of today, right? So our range is currently massive, okay? But what's one thing that you notice about this? Ready? Let me just remove that for now. Where did we get to finally today before we bounced? Right off of our 50% mark of the range. Ain't that something, huh? Starting to run up. So while I do still lean bullish here and targeting that most recent high, ultimately on the higher time frame, I think our draw is still up here before any type of retracement. But we'll have to wait and see. Another day where we have some high impact data with PPI in the morning. But that's kind of just where I'm at in terms of how I'm kind of moving forward with my ideas going into tomorrow. So as always, I like to start off with those recaps just to get it going. So let me just pop back over here and look. Oh, KD's here. I'm going to add KD to the stage. KD, welcome. I just unmuted your mic so you could talk whenever, but I just want to go over a couple of these things here. But you'll notice that I'm just looking here. Can you look at NASDAQ and ES on the 1 minute and see if you find any breakers at market open? Yeah, I can do that, Sean. But again, I try to avoid the 1 minute time frame, to be honest with you. I use it while I'm when I'm in a trade, and I use it as a way to kind of give myself an idea of where it would be a decent time or a place for me to put my trailing stop and profit, right? Typically below like a 1 minute fair value gap or something like that, where I want it to go below. But yeah, I guess we could do that. But again, I don't really value 1 minute much of anything on the 1 minute. I got to be honest. What's up, Greg? Financial Fred, what's going on, man? Anon, I'm holding UVXY. Yeah, I don't know. I've really lost faith in the VIX. I think the VIX is worthless. Mo said also turtle soup on the hourly. Yeah, let's check that out. Hold on. We'll go back over here to the hourly time frame. And where? Oh, this is the daily. Whoops, sorry. And there it is, your little turtle soup. That low, swept the low, took off. So yeah, and again, just like we were mentioning on the 15-minute time frame, plays out the same way in the hourly, right? No discount retracement, no discount retracement, no discount retracement. Finally, we get into discount on that hourly price run, and we're gone. So just all good stuff that you can use in your own trading. Just this one's really quick. So Katie said I closed my puts at 10:06 a.m. Nice, yeah. But just to answer this question really quickly, because it's really not one that will take all that much time. The one that Gene had brought up, where he was talking about what do you mean by adjusted versus non-adjusted. So if you look at a futures contract, you'll notice, and even on SPY and QQQ as well, like you can click this button, adjust for contract changes. And let me just do it on a higher time frame and see if it actually matters, right? Because a couple of weeks ago, people were talking about all-time highs on Qs and everything like that, and it's this is what it looks like unadjusted. But with adjustments, you're going to notice, right? You see that difference, ready? I'm just going to keep flicking it back and forth so you see. Currently at highs with the adjusted contract or unadjusted contract or adjusted contract. Sorry, not unadjusted. But with this is like a running thing. So the numbers you're going to notice, especially like in March when the contract rolls, right? We just entered our March contract here for NQ. So here, if you take a look like this and where to go, NQ, you're going to notice, you'll see NQH is your March expiration, NQM is June, NQU September, NQZ is your December. And those, as you get closer, you'll notice like towards the end of the quarter, when we start to roll the contracts, looking into our next, which in this situation here, we're currently on March, we'd be looking to June. The numbers are much different. So by me using NQ1 with the exclamation, that automatically brings it to the current contract, and it's kind of adjusting price as fit, I guess you could say. I'm curious actually. Let's look at SPY adjusted and unadjusted, because with this, it adjusts the price based on like dividends and stuff as well. Let's say, yeah. So look, that's a much different look here, right? Whether if you're to use the uh, adjusted unadjusted versus the adjusted, right? Adjusted, we're over all-time highs, right? And that's why when you were seeing it over the last couple weeks, when we actually, I mean, in this case, we did. You noticed that that tweet was going around quite a bit. But if you were to, look with the unadjusted, or adjusted for dividends, or adjusted for contract changes and stuff like that, you're going to notice that we did not take that out. So I hope that was helpful there. Where is, let me go back over. Hey, Katie, can you talk right now or not? Nice. And on.
I'm here.
Nice. Oh, great, man. Yeah. So let me just see if there's any more. What's up, Kale? Happy birthday, by the way. I hope you had a good day. All right. Katie, before we get into banks, because bank earnings are tomorrow, and Katie wanted to pop on and talk about that, but let me do this really quickly. Let's just go to the 1 minute chart for Sean, and let's see if we can find. I'm just going to do a new chart, and we'll look at it. Look, it puts this useless indicator right here automatically. So, all right. So let's just look at NQ. That's fine. Oh, no, not that one. NQ here, and we will go with our contract that adjusts. Okay, now let me go down. You want to go to the 1 minute, right? And we'll review the entire day on the 1 minute time frame. Oof. Ready? Let's zoom it. Whoops. Okay, a little better. And pull this sucker out. All right, and I'll get the whole day here. To boot. Ready? Okay. So, I mean, just like we saw on the 5 minute right off the bat, I see the low, high, lower low, break of that high, right? On the 1 minute. Whoops. Hold on, ready? I'm just trying to zoom it in. It just looks sloppy because there's a lot on the chart, and I mean, I should even really just zoom it to 930. Maybe it'll look a little better. Hold on. Okay, yeah, that's fine. So if you look at that breaker that we were talking about, the low, high, lower low, break above that high. Where is it? Ready? Oh no, right here. Boom. And we'll use that breaker candle as, oh shoot, I gotta fix this. Hold on. Whoops. Okay. No, wrong candle. Come on. I hate the 1 minute. Ready? Here it is. And we'll make this black. You'll notice once we broke it, we got to the CE of it and bounce and bounce, 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 right? So that would be at least the one for today. Here is actually, ironically, I guess something that you can use also is just on the inverse of that, a bearish breaker. So if we look at the 1, you have a high, low, higher high, retracement down into discount, retracement up. Ready? There's your breaker, and there's your rejection, right? Almost perfect. But again, I don't really like the 1 minute all that much. I mean, even down here, you can use it as well. So let's see if we can find an example of one here. No, not really. I mean, this one's sloppy, and this is probably because it is on the 1 minute. But ready? You have your low, high, lower low. So the high candle right there would be your breaker. Ready? Right here. Okay. Price breaks it. Yeah, just ugly 1 minute stuff, right? So that's that really. That's why I don't really value it all that much on the 1 minute. I mean, this played out fine, but it also translated into higher time frames. So for example, you go over to the 5 minute. Whoops, ready? Come on, give me this. Here we go. Slide it over. And there. Okay. Low, high, lower, low. On the 5, you actually had that high wick, right? And there it is. Same situation. Break above, retracement into it, take off, retracement into it. And this is what you were dealing with on the 5-minute time frame. Just like, I showed you guys the 15-minute fair value gap that we were rejecting before when I was in that trade. That's what you're dealing with on the 5. Beautiful. You actually have one more overhead. So that's what you got there. Again, I mean, while we did get into discount on this 1145 low, do we need to dip deeper into discount? That's a question. I don't think so. I think we actually start to move higher from this point, but this doesn't seem to be a terrible point of a retracement. The breaker kind of throws it off. I wouldn't really anticipate price coming back down here and completing my model in this situation, but we'll see. So let's go over here and let me just see. Pete, hopefully that helped that. Yeah. I know you were curious about it. All right. We'll go through specific names in a second. KD, you want to pop on and talk banks for a sec?
Let's finish with banks if you don't mind. Give me some time to get off the road here.
Yeah, sure. I'm thinking I'm only going to stay on here until about 9:30, but all right. So if you have any names that you want to take a look at, feel free to post them over in the chat. Also, would love to break my my record on here in terms of live viewers. So if you would share this, share the room, that would be great. Let's do a lot of our stuff. Hopefully we don't get all that many names, and that way it'll be a lot easier. But let's go like down the line in terms of what we look at what time frame. So we'll do Baba first because that was one that somebody just brought up, and we'll go each time frame down to an hour. And I'll just show you guys how I try and figure some stuff out. I'm going to take this off just for now. Oh, sorry, that doesn't even matter. But I will take it off anyways. Let me go. I don't like this blue and orange. I think I got to go over here to get rid of it. It's like daybreak or something like that. Day of week on labels. No.
Extended hours and day breaks, pre-market.
Extended hours and day breaks. Where's that?
Bottom right of the chart. I believe where the adjusted contracts is. It's in the bottom right corner.
Here?
It should be, I think it says EXT. Yeah. It's down there.
Oh, that helps. Thank you, sir. All right, so let's go over here. I thought I was able to just remove that and still use the extended trading hours, but that's okay. All right, so Baba, here we go. So setup still there. This candle, to me, this would be huge for Baba, in my opinion. If you can get a close above that gap down, so I think it's 73.01. I personally really wouldn't want it to, to me, under that 69.81. And I think the trade is kind of donezo for upside for bulls who are in this. But right now, I mean, risk reward, you're risking 21% of the range for a potential 79%. So that ain't all that bad. Still structurally fine. You have this bullish volume imbalance right here, which is typically an area where we get bounces, right? If you were to go on YouTube and check out my model or check out the Mando model thing in the group on Discord, you'll see that this is something that recurs quite often. You do have a couple levels overhead that you're going to have to deal with over time if you are to make that run. You don't have one there, but this right there, that's a little bit higher. Sorry, there it is. That's really, to me, you close above that and you're in good shape. Now with Baba, let's just look at it. I know breakers is kind of the theme for tonight, but you have your low, high, lower low, question mark. So really, above 87, I know it's a huge move, and a lot of people want to catch it before then, but over 87, you could expect a break, retracement into this candle, which is also a pretty big range, and then start to look higher from there. But I don't think this is going to be a quick fix by any means. There are a lot of, we were joking about it, what was it, today or yesterday, about these Chinese names, where literally every time that they make a big move one day, the next day they literally gap down. So that's just looking at it on the hourly. You'll see I haven't charted this thing in forever. So let's remove the daily levels for now and we'll do it together. But very similar. The weekly is just cleaner. As you can see, it looks very similar overall structurally. But hold on, let's just do this for now. Oh, whoops. Ready? What was the first time we shifted market structure here? It was really from, whoops, let's get there, low to high. Continue on, you'll notice. Oh, I'm sorry. Here's your first little run. Bing. Discount retracement here. There is your first. Well, that's another level that you can look at moving forward, actually, here. One. Here's another right here. Whoops. Two. Okay. And that's the big one. That's the, oh, we actually are down and through that already. So that's where we bounced last time. So far so good. Really, you really want to see Baba at least start making a move higher, especially on that weekly time frame. Now on the hourly, let's just take a look. I know we're going through it, but I just didn't see many names that people wanted to see currently, so that's why I said, why not? Okay, so our market structure shift right off the bat, you'll notice down. Okay, we took out these sets of lows with that gap down, that move down. Notice how no 50% retracement at all. And we just continue on. There's no 50% retracement, and then we can't just say that the range is set, right? Ooh, hold on. I see something. Okay. Close. This low is at 70.08. This low is 70.13, relative equal lows. That's scary. We also have relative equal lows here too. Ready? With this, you have 70.92, and here you have 70.96. Ugh. Yeah, I don't know. Baba is not looking so hot right now, but it really can make up ground if it were to make its move on the weekly above that bearish volume imbalance or gap down. If we were to just look at it from this perspective, we actually did shift market structure, believe it or not, on a very, very small time frame. So on this price run, right, we took out this high here. Okay, so taking out that high, then you would look for your discount retracement. So far, so good. So 73.14 would complete the model in that situation there. Let's just look and see. That's a bearish level moving forward right here at 74.66. But you'll notice that there's going to be so much more noise, or so much more levels, really, because on the smaller time frame, you're getting a lot more instantaneous feedback. But when you look at the weekly, it paints a much more beautiful picture than what you're going to see on the hourly. So this is currently where we're at. So on Baba, my model does complete at 73.14. I know it's not all that big of a move, but you'll notice, okay, took out the high, retracement into discount and bounce. You could say, all right, I know we took the high, but like, why would we reject there? And, simply put, just like this rejection had occurred. Look at that. That's something, huh? Right? See, range, retracement, dump. Okay. So here's the thing. Now, if we were to look at it just the same with that gap down right there, same deal. So closing above that's pretty good. Finishing my model at 73.14 is great. Getting up into this is even better. And let's just check and confirm what is that level that you would be important to beat. 73.01. So how does that shape up on the hourly? 73.01. Oh, okay. So if you complete my model, then essentially my expectation would be here, and then from here, you actually close the weekly above that level. So that would be a home run. Below this bullish imbalance here and those lows 70.08 probably, likely. So that is that's Baba. Just again, you can use a ton of different time frames in order to reverse engineer it, I guess you could say, and just try and come to a conclusion that way. Patrick, no, we haven't done Tesla yet. We can do that. I'm in 2025 longs. Do we think hold or roll to 2026 if still no breakout in a few months? I mean, I don't know. That's kind of reliant on you more than say me or anything. You know, these Chinese names are taking forever. I'm not in Baba, but I like that Baidu name, Bidu, and that thing is taking forever. Just like Baba, obviously. You know that better better than anybody. It's just taking forever. So yeah, right now, like really not all that interested. But oh, Greg, sorry, I just saw your messages. Cool. All right, let's do Greg's names: Walmart, PG, and Amazon. Oh, good. James had Amazon as well. So let's do Amazon first. AMD. Okay, let's go. And we'll do it over here too. All right, so let's see. Amazon. All right. Ooh, Amazon. Look at that. Okay. So we had just I know everybody in the group has heard me say this 100 times, but here was Amazon's run. Okay. Your initial take of your buy side run. Okay. Retracement down into discount, bullish imbalance, check, run up. Okay. And my model completes there. Now, really where we are throughout a lot of names throughout the market, we're currently here, right? And in this situation, you'll notice this week prevented that bearish imbalance from forming, and in doing so, we set another new high. So really with Amazon, it's unfortunate, but it just doesn't really line up with anything for me currently, right? Could it still move higher? Yeah, I see 158.65, I see 170.83, but you know how I trade, and I would prefer it to get into discount of the range. Actually, really, to be specific, this is something that I wanted to show you guys actually on Amazon. So first and foremost, you have a monthly breaker, which you'll notice right here. This actually might be a weekly breaker. I'm sorry, but oh no, here it is. Whoops, hold on. Ready? Low, high, lower low. And here is your monthly breaker. So a much bigger sample size in terms of what that breaker looks like. Okay, there it is. So upon breaking it, taking out that high. Here's just one thing that I'm curious about, because look, as you could see, obviously we got back into the breaker after breaking it twice and we bounced. But I'm going to remove this just for a second. What do you also notice in here? You got a pretty big bullish monthly fair value gap right there. So I don't know. Do we get into this, or was the breaker enough to drive us to our monthly buy side at 170.83? That's something that I'm a little curious about. I know a lot of the times when you guys ask me about these stuff anyways, like, you're probably looking at it more for like a shorter term, shorter dated swing trade or something like that. But, really, I think tomorrow, how we close will be telling. I'm still bullish. People are starting to call me perma bull, but I'd rather be on the perma bull side recently than the bears, but that's okay. So let's just look, similar type of situation here on the daily. We actually just beat that daily bearish imbalance, and on the run, so we have that imbalance overhead at 158.40. Also notice that this is the same level that we identified over on the monthly, 158.65. That is a buy side liquidity. So also a possibility. Curious what happens tomorrow. I think tomorrow will be very helpful for us moving forward, and just to kind of see how the weekly ends up painting, right? Does this weekly paint even higher? Do we take that 158.65 tomorrow? Right? Maybe. Do we completely close above this level finally? I don't know. we'll see. But let's see. Oh my God, my friend just texted me about Bill Belichick leaving the Patriots. That's horrible. All right, so let's look at grow up, Dave. If you're watching this, grow up, bro. All right, so here we go. You'll notice here's on the hourly, swept the lows, took off. Okay, there it is. Here's your hourly. Ready? Boom, sweep, gone. Okay, so that's a sell side sweep. We also shifted market structure. Wow, I did not realize that Amazon did that. So in this situation currently, what was the start of the price run that took out our first set of highs, or our most recent set of highs, I should say, because we did take out these right here. So ultimately, ready, from high, low to high, that price run there. Why wouldn't I use this? And the reason I wouldn't is just no discount retracement. So there's your low to high. You'll notice we did get into discount so far. Do we get into something like this before we go higher? We also did take out higher time frame liquidity, right? We took out this hourly. I'll mark that out for you. And look where we retraced to. Couldn't quite get over it on the first attempt. So that's something worth noting as well. So you might ask, like, oh, why would we bounce here? Okay, there it is. So again, everything, you can justify everything on the chart. I'm positive. Any chart you guys want to look at and you say it doesn't make sense, I bet you might not agree with me, but I think I can give you a decent enough explanation as to why something would have occurred. Does that mean we're always right when we trade? No. I think that's a misconception as well. Actually, somebody in the group today said, like I see it, but at the same time, I'm also seeing it from two ways way too clearly. And when that happens, that might just be the best time not to trade, right? That happens to me today. I was on the fence 3 times before I ever pressed the button. There are times where you feel like it's almost a no-brainer, and then there's other times where you're fighting with yourself in your head. I can totally see this playing out, or I can totally see this other perspective playing out. It happens. And typically those are just not the best trading conditions, and they happen. Literally August, garbage, for real. So that's Amazon.
Yeah.
Ultimately, I still think higher, but
Man,
Katie, you're cutting out a little bit there. Yeah, no, you're cutting out a little bit. So, yeah, you're good. All right, let's pop on over to Tesla, because Tesla was one that actually got me beat the other day. I had to get rid of my February's. Structurally, not all that bad. I was just getting, I've been trading Tesla for a while, and this most recent roll beat me. So I'd rolled my January win into February, so essentially take the profits and move it to a contract for a further month out, and just obviously did not go in my favor. So, but we did take out this swing low here, also filling this bullish fair value gap right here. Not a terrible place right here, really. You also have a bullish order block here, so down close candle followed by an up close that takes out the open of the previous candle. So not a terrible idea. Also, if we were to look at it from the perspective, like there were, like, on the daily, it's probably going to look even a little bit better. But so look at that. Okay, is this a turtle soup, or is this a market structure shift? Well, let's zoom in a little bit more. Okay, so let's go from the wide perspective, and then we'll go from the we'll tighten it up a little bit. Okay, so what was the price run that took out multiple sets of highs in the process? It really started, I mean, you could argue here, and I really would argue that, right? Because oh no, actually I changed my mind. Ready? Let's move up. Ready? Whoops. No discount retracements throughout this entire run here, and you'll notice, bang. Okay, so held the final bullish imbalance in this daily price run. But also, if we're to crunch it and look a little bit tighter, we took out that high with which price run? from that low here, no discount retracement, right? Discount retracement finally, okay? So after our discount retracement, bang, we do end up taking out our high here, okay? So from this perspective, we come out here and we look at the, again, what was the low in this situation that ended up taking our high, and there she is. Is this a market structure shift or a turtle soup? It's a great question. To me, risk reward is probably much better to the upside, knowing that our overall trend remains bullish. And this overall trend really dates back to when we put our foot in the ground back in March or April of last year. Also, even this move, can you justify it? Yeah, absolutely. Ready? Just look at it from this perspective. Okay, discount. Bingo. So my model will complete at the high, and then you can just, literally do this. Okay. Next. Bing. Okay. And let's sweep that here. So that's something. So we'll see. Tesla is one that ultimately, I really wouldn't want it to lose that imbalance. You do have another imbalance. You got a lot of them, and that's the tricky part. But I'm thinking that's probably line in the sand for me. I really wouldn't want it to go below there, because if it does, then to be honest, that could be a possibility. And I would not want that to happen. That's down at 200. So here's another right there. Whoops. But overall, I still like upside on Tesla. Just it took way, way too long. When I first was talking about it, it was here. I know Ryan in the group brought it up down here, and that's where he snagged his shares. He really caught it nicely, and this is where I was looking for that Christmas run, which we ended up getting, but not quite to completion, which is still at 299. So we will see. But that's Tesla. So yeah, you got it, Pat. All right, let's go back to Greg. Greg had Walmart. Okay. I'm curious where Walmart is sitting at the moment. Ready, Walmart. Also, thanks for everybody. Thanks to everybody who is here. If you would be so kind to share this little live stream, I would appreciate it. I'm trying to break this record. Last night we got to 1,500 something. We didn't get 1,650. So I would love to crack it 2,000. That would be sweet. Okay, so here's Walmart. Tomorrow's a big day for anybody looking at Walmart, but we have a bearish breaker. High, low, higher high, break of the low. Okay. And the entirety of this candle is to be viewed as our breaker, right? You could say, well, Mando, that range is enormous. I have no interest in that. Okay, so why not just crunch the range, right? So what's the range? What was the price run that actually took out that low? And it was from this high to that low. There's your retracement into discount of your bearish range currently. So really, I think the most convincing thing for bears, and the most convincing thing bears could do, is to close this thing under 161.05. We're currently 6 cents above it, right? Really, where does the trade go bad, and where do I think bulls take over and actually shift market structure to get this dub? It's really not until 169.94. I mean, it's really not all that big of a range in terms of risk reward, but just in terms of like being safe, like this is the idea, and this is something that I'm actually looking at into next week, and just kind of see where we close. Because again, I'm just looking at it from the risk reward perspective. Really not all that bad. What are you risking? $2 for a potential 12 here? It's not bad. But if you were to use the entirety of the range, now you're risking 8 to make 12. Doesn't really make all that much sense. So, but that's Walmart. I know it's not all that fancy and stuff, but what else? Does anybody else have any other names? If you do, just comment them and we'll get to it. We only have a couple more queued up right here. So thank you for streaming this content. Very much appreciated. Yeah, you got it, Roller Coaster. Thanks for being here, man.
Beto, want to
Fatih
check
said,
out?
hey, bro. Oh, what's up, Kev?
I was gonna say, you want to check out Mara? Oh, sorry, I didn't mean to cut you off.
Yeah, we can do Mara. Let's just do PG. So I got PG, Google, and then HK50. Those are the last three, and then we'll go to Mara, and then we'll see what we got cooking from there. So if anybody else has anything, mindset trader, BA, cool. We can look at BA. We did that one last night too. All right. So first, let's look at PG. All right. Oh wow. Let's see. Stroman went to the Yankees. For any baseball fans in here, I don't really care. Okay, so sorry about that. Okay, so here looking at PG, not so sure when the last time we charted this one was, but if we were to look at this
Monday.
anyways. What was that?
I think it was on Monday.
Monday. All right, so ready. Just we'll zoom out just a little bit so you guys can get an idea of how we got to this current situation, but this should have been green and I mistakenly put it as red, but that's okay. So ready? Here's your market structure shift. We took out these highs right here with this price run, but even before then, let's do it. Forget it. Okay. What do we take out this high with? This price run. Okay. Boom. Discount retracement. Check. Is there a bullish imbalance here? Check. Mando model complete. 155. Bang. Right here. Okay. So now after that, my model completes. What do? Just slide it over. Just go over to the green candle that really spurred the move up through. So it was the start of the price run that took out these highs here, that low to that high. You will notice discount retracement, check. Bullish imbalance, check. Run up through the highs, Ripper Jones, Mando model complete again. Now, if we were to look over here, right, you'll notice, and again, at some point in time, we're going to run into a situation where my model does not work, right? If my model worked every single time, price would only go in one direction. And we all know that that is not the case, right? It doesn't. It retraces at times, right? So at a certain point, I'm going to be wrong. When do I think I'm going to be wrong, or when might not be the best time to use my model? Really, that's the best way I like to look at it. And the best time to not use my model is after we take out a higher time frame, sweep, right? We take out a weekly high. That's a situation where, specifically here, I mean, this is actually a pretty good example of like literally the worst time to consider using my model. And if you look at this whole price run up, right, you'll notice like we've made one imbalance in discount of this entire run, and it's right here. And we made an imbalance candle down and through. So really, I mean, the risk on this trade would have been what, like 44 cents, so it's not all that bad, but that's a loser. Absolutely. So from this point, let's take a look and we'll say, okay, so what was the start of the price run that took out these lows here? And to me, it's this candle here down to the low. Okay. Let's just see, because I think this is the reason why I had it labeled there. Anyway, it was. Okay. So ready? Took out these lows here with that price run, retracement into discount, dumper, model complete. Okay. So what was the high of that price run that really started the reversal? And there it is. So down to these lows, took out that low right there. Bounce, right? You guys see how when we take a higher time frame liquidity, it does create that bounce, though. It's pretty interesting. Okay. And we get up into this bearish volume imbalance. That is a gap down showing you urgency to move lower, right? And we get up into this bearish imbalance, reject multiple times. You notice we do end up getting a close above, but I don't have it marked here. And I typically don't mark these all that much, but that right there, folks, is a bearish order block. You'll notice right off 50% of that bearish order block, we reject. And we actually come back down and we hold here. That's pretty interesting, actually. So my model would complete in this situation at 140, 145. But a weekly close above this bearish imbalance, and you might be onto something. Yeah, so let me just go over here. Let's look at the daily just to see if we can line this up. Oh, check this. So here's where using multiple time frames can be really helpful. So again, very similarly, took out that low with that price run. So you're going to see this. See the model, it plays out no matter what. But there it is. Bloop, 50% dump. Okay. Actually, one standard deviation to be precise. We do get a little bit of a bounce after that. Let's just go over here and we'll grab the high that started the price run down to there. Ooh, sloppy mess, but holding. We held this. So right here, you have your bullish fair value gap in addition to a gap higher. I'm just going to make it one big gapper. Held it. So not all that bad. It's very similar, but you're currently in discount of a bearish range in a bearish imbalance. So that's PG. But, you know, a close above this in here could shift market structure, but that's what I got on PG. So using the multiple time frames is helpful. Okay, so that was PG. What else? Yeah. Okay, so cool. Yeah, mindset and Danny, we could do BA too. Just give me 1 second actually. So let's go over to Free Your Mind, brought up Google. So we could do Google. Let's do Mara after BA as well. I know 2 people have BA, and just in case they want to get out of here. So Google. Okay, you'll notice that Google, we have it. I'll show you how we get here. Okay, so we have our initial price run. Okay, discount imbalance, check. Ripper Jones to the highs. Mando model complete. Let's keep going. Right here, bingo. Oh, whoops. Boom. Okay, you'll notice no discount retracement, no 50%. To me, the range isn't set. Kind of what we could potentially see here on NASDAQ, right? Range might not be set. And if the range isn't set, then we're not gonna, why are we trying to force things, right? We don't need to do that. Okay. All right. And there we go. Bang. So range was set here because look at that. 50% bullish order block, bounce, run through highs. Check. Okay. Beautiful. Now I'll just keep on sliding. Okay. Ready? Discount retracement. Bing. This is a bullish order block right here. Should be purple. Whoops. Okay. Bullish order block and your run for the highs. Bang. Ripper Jones. Mano model complete. Now in this situation here, you would have it as something like this. Okay. Right here. Discount retracement. Bang. Mano model complete. Okay. So we just completed on this weekly candle. We're currently below it. Here's one thing that I would look at, maybe not tomorrow, but into next week. I really don't think that Google is going to close below 139. But next week, if we were to get an early week retracement, I would want to see previous resistance flip support, get into here, and then take off for that 150, 155. To me, that would be the most ideal situation. If we are to close back tomorrow, we get some crazy move where Google ends up closing down $3 or something like that, right? And we close below there. That's not all that what's it called? That's not all that convincing, to be honest. Would we get into discount of this most recent disgusting small range? Yeah, but that would really turn me off to the idea. So close above, and then this week I would look for red to flip green, get into that, and then take off. That's just me. So that's Google. Now let's go back over here. BA was the name. Okay, so we'll go with BA. Again, if you know, I'm running a little bit out of time here, and I know Katie wants to talk about banks. So there's 2 Katies in here currently. We'll see whichever one ends up, you know. But let me do BA. We'll do Mara. We'll do HK50 and Beyond Meat, sure, and DIA, and then we'll call it. So first, let's go BA. BA is quick. We did this one yesterday. So BA got smoked today. Check where we currently are on the weekly. Okay. low, high, retracement, almost to 50%. Not so sure 50 is going to be the mark, to be honest with you. I think we can go down to a deeper into discount in this imbalance. We also, I mean, really, even if you like buying BA down here, like buying an options contract, to me, and this is for me, of course, everything that I talk about here is just for me, really, like my idea of it. But you got a lot of resistance levels ahead, even though it is a bullish trend. And this down move is really just a retracement into discount, because you'll notice what completed prior to this low, high, discount retracement, Mando model complete. So, right now, like this down move actually is just a discount retracement into a bullish imbalance. The timing factor of it is just awful. So that's why I would have no interest in trading options in something like this. Because you'll notice that at times there will be, controlled demolition, meaning maybe one imbalance, but maybe none, right? And we slowly start to simmer down, not creating any higher time frame imbalances. Then we get to that 50 and we take off like nothing, right? In this case, you got a lot of work cut out for you. So, yeah, that's BA, simply put. Okay, so let's go to Mara, because I know Katie wanted to talk about this one too. Yeah, so really, Mara, I would love to get Mara at 1988 again. As you could see here by my beautiful tweet on October 26th, back down when we were, somewhere around $8. I said, please tell me you see it, and I hope you did, because at that point we had a beautiful Mando model, low, high, discount retracement, bang, take off. Somewhere in here actually there was, here it is. I have it erased now, but low, high, lower low, break of said high. This would be our breaker candle. Look what happened when price got into it. Adios. Goner. That's your bullish breaker. I'm going to make a video on that for the group soon. But also, if anybody's interested in joining the group, use code Markets with Mando. This is the live stream stuff that I'm doing. It's the longer form content. When I make the videos on YouTube, they're usually shorter in time. And the reason I do that is just, me going through specific names or BSing on stuff that's in the moment on those videos is kind of useless, especially if you watch it like 2 months after I put it out. I try to keep it as focused on the actual concept as possible. But so yeah, in this current situation on Mara, you have your, Mando model completes. Now you have your new range set, and this is what it currently is from our low to our high. You can even, personally, I don't know why I had it over there, but I like using the green candle run up. But to me, I would like a discount retracement, 1952. This imbalance goes down to 1832. I don't know if I'm going to get a chance at that, but I would love to get a chance at that. But even here, you notice where we reject, right? Bearish for value gap on the weekly, dating back to April of 2022. But currently in a bullish imbalance. If we were to close above that on the weekly, I don't think I have any shot of getting that 1988. But that's just me, where we're at currently. So, yep. See, Ice Bear. Thanks for popping in, man. All right, let's see. What else do we got to do? HK50. Okay, I don't know anything about this, so let's see.
Mando, can you hear me?
Yeah.
No,
Thoughts? You trade this?
My takeaway. Good.
No, yeah. What were you saying?
No, my takeaway from Mara was I actually wanted to take out 2039, which is last week's low, weekly low. But yeah, no, dude, that's the same thing. It's like I thought today we would take it out, or at least you're looking for, I think, 1950. No, I just wanted to take a sweep last week's low before we retrace higher. But both of our setups didn't really work on.
No, I mean, dude, today was really frustrating to me. Because, and you know what, like, I was trying to be, mature in that I didn't want to act all pissed off, but I was really pissed off. It setups there. I was either A, too late, B, I didn't want to risk the full amount of the range, and where I had set my trade, my idea, we never got to. So it was kind of frustrating for me because there were huge moves and there was a lot of points to be made, and I didn't really take anything until 2 o'clock. It stinks when that happens. I've been there many times. I'm sure I'll be there many more times, but it's kind of a part of it, especially with the big range when you're trading something that's pretty leveraged like NASDAQ, where it's $20 per point. Today we moved like what, 250, 300 points. It's like, that's a lot.
Yeah.
But hold on, let's look at this HK real quick. HK 50 on the daily right now. We have a gap up, and I like that yesterday closed green, like some urgency to move higher, and we have some filled daily imbalances till 16,800 at least. I really don't know how I feel about this. I really would want to see the weekly candle close back inside this imbalance, and I'm not so sure it's going to do that. But you can look, from this idea, like what was the price run that took out these highs? Even if you want to be generous and you want to look at it from a bullish point of view, here's a bullish order block, which we're holding right now. Any weekly disconnect from there, and I think HK is toast. So I would not want it to disconnect from that, and I really would want it to.
Yeah, I'm having a hard time.
in it.
I'm having a hard time looking at this from a bullish perspective. So I actually drew my fibs the other way, and we just wicked into the 0.62 and rejected it, created a bearish order block, dating to January 9th of 2023.
Yeah, so
I zoomed all the way out.
And I know this is, what have I've been looking, I when I look at like these names, I look at HSI, but I haven't really even looked at that all that much. Just really not too interested. But to me, losing this, like a weekly disconnect from that imbalance here, is no good. So maybe, I know it's active right now and it's currently up, but I'm not so sure it's gonna hold there. Again, this low right here, I don't know how well that holds up, but you do have a bullish order block here. I don't know. I'm not really a huge fan of that right now. Let's see. Beyond Meat was another one Fatih brought up. Down 30 to 35% down and haven't really created bearish weekly imbalance. Also filled the gap today and reacted. Can you have a look at that? Yeah, so I actually charted Beyond Meat over the weekend, and it was kind of like a do or die situation. So let's see where we're currently sitting. Probably in that same situation, but yeah, okay. Literally do or die situation. Yeah, so while you're right, there hasn't really been all that much created. We did get into this imbalance here, and we did not get to 50% of this current range, so that's worth noting. Now, with that being said, you have a I bet you if you see on the daily, watch, this is going to look much more clear on the daily, but ready? Let's use the most recent bullish price run. Not bad. So this would be really the volume imbalance I'd want it to hold for a move back up towards 1109. From that 1109, you might say, okay, why do we reject there? Not this one specifically, but this is another place that you're going to run into some trouble. But here is where you rejected the last time. So again, everything can be justified. I love making a point of that. I think that's very important. But okay, low, high, lower low, bullish breaker. We just got into the bullish breaker as well. Yeah, not bad. Not a bad look there, Fatih. On Beyond Meat, it's about $7. I hate Beyond Meat, but not that I've ever had it, but I just hate the concept of it, so I'm out.
Every time you played it, you did pretty well, though. I remember that day.
Yeah, you remember we took that one day? That was insane.
No, that wasn't me. That was you and Ivan. You guys took. It was like $50. That news came out with like I think McDonald's saying "fuck you guys, we don't actually use Beyond Meat," and then you guys took like 30 puts, like
In
50 puts.
seconds. In
Yeah.
seconds. I swear we got in because we saw there was a lot of flow, and this is when, you know, we were trading off of, or I was
Yeah.
trading off
Yeah.
flow predominantly, and I saw so much coming in, and I'm just like, all right, this is hard to deny. I'm just gonna, you know, and it was a short-term, short-dated contract too. I'm just like, I'm gonna take a flyer on this, and literally minutes after I got into it, we got a halt, and it just gapped down insane. So by the time we opened it up, it was up ballistic.
Yeah.
I want to go back and find that. I wonder if I can do that right now. Let's see.
I think that was 2022.
Yeah, it was a while ago. What is it? BYND?
Yeah, BYND.
Yeah. So anytime, you know, I chart a lot of these names. If you're ever curious, you could just do at MandoTrading and then the $ and whatever the ticker is, and you'll see, you know, whatever I've ever put in. I want to see if I posted a gain bot on this. Oh, Ivan did. Yeah. So Ivan took the 35.5 puts of April 29th, 2022, and he made $930 in seconds.
Wait, how do you know that? How do you know that?
Because he tagged me in the tweet.
Yeah.
Beyond who, easy short with MandoTrading. Blood laugh at Masume listening live. Yeah, I don't know if I posted mine. Dang.
Yeah. I know you had quite a few of them.
Oh, yeah. I just wrote in all caps, LMFAO, Beyond Meat put just saved my day. We sniped those. Okay, so yeah, I guess I didn't post the amount. I wasn't feeling in a bragging mood, I guess. All right, so one more. What are your thoughts on DXY? I'm still bearish on dollar. We'll pull it up. I mean, there again, just like how I was showing you guys with that showtime and balance situation, very similarly with the dollar, we have relative equal lows and we have relative equal highs. So thanks, that's really helpful, right? The fact that we rejected this bearish imbalance here, even on this most immediate price run, if you're to look and see like where we rejected, we did get into discount after taking out that low right here. So that's our bearish range. There's our discount bearish imbalance and our rejection. We're actually going to likely, unless tomorrow something crazy happens where the dollar's down 50 cents, we'll create a bullish imbalance, which is not ideal. That could retrace into there and look for those equal highs. But following that equal high, I'm fairly confident that 99.57 gets tagged. Really, the most bullish situation for the NASDAQ SPY bulls would be no bullish imbalance formed, or even if a bullish imbalance formed, we melt that sucker and head for these equal lows first. That the equal lows here in this situation to me is more than enough for us to get to those all-time highs on NASDAQ. So, and you know, that's just again the dollar. You might say, oh well, you know, if it's the exact inverse, then how is it helpful? The dollar also creates its own sub levels too. So if you don't have something clear cut on NASDAQ, which, you know, we do have a bearish imbalance, but we've tested it multiple times, how do we know it's going to hold, if it's going to hold at all? The dollar is quite helpful in that situation because we do have more immediate levels that we can look at in that situation. So so my only issue is, what if they get to the monthly bearish imbalance? Okay, so we can look at the monthly on the dollar as well. Ready? Month. And we got to go to dollar. Okay. Yeah, the monthly would be the relative equal highs. Yep. So that, you know, that would stink. But, you know, ultimately, if we're talking about long-term de-dollarization, it's a long process if it were to ever happen. It's not going to happen overnight. But you will notice that, you know, if we were to take out this low, our new range would be from that high down to whatever our new low would be. And that bounce into that monthly imbalance would be our discount bearish imbalance for another rejection lower. So we actually, yeah, we don't necessarily have one. We do have a bullish breaker, but it's not until 94. So it's like way far off. So, but yeah, I you know, again, I'm still kind of leaning towards us moving higher first. So sweeping that high. The fact that we erased last week and did not allow a bearish fair value gap to form is big, in my opinion, for the NASDAQ SPY tech, you name it, bulls. That's a pretty big deal in my opinion. So, but all right, KD, you wanted to talk about bank earnings, so the floor is yours.
All right. So tomorrow morning we have JP Morgan reporting at 7 a.m. Bank of America 6:45, BlackRock Investments 6:15, Wells Fargo 6:55, Citigroup 8 a.m. And then Bank New York Mellon at 7:05. We got a large amount of banks reporting tomorrow. My typical thing, I know Mando says that he religiously doesn't trade earnings. I lean towards not trading earnings, but when I do, I usually look on to short options premium. But specifically on just what I look for typically is I'm charting out higher time frame liquidity. It's kind of something that Ryan kind of got me into, especially when we were starting to look at some names, I think about 4 quarters ago, charting higher time frame liquidity, looking to see the higher time frame liquidity is swept on the initial reaction move and then kind of fading back, either reverting to the mean or running the trade to the other side is typically how I would view, or that's how I kind of look at earnings specifically. I don't have JP Morgan, actually really any of these banks that are reporting tomorrow charted out. But specifically right now, I know that a lot of the bank names, as we looked at last week, are at highs. So you have JP Morgan, which is at 170.30 at close today. The all-time high for JP Morgan was made in 2021, and the high was 172.71. I would really expect that all-time high to be swept in pre-market tomorrow. Now, do I think it holds? That is a good question. I have no idea. I would not expect it to hold. If not saying that you should technically play JP Morgan, but I don't think it will hold that high, but I definitely do think it will sweep that high. I'll take that liquidity out. I pull up.
So you're talking about the all-time high, yeah?
Yeah, the all-time high. Yeah, because it was like,
so we checked that out last week.
Yeah, we did.
Yep.
Yeah, we checked it out last Friday because we were like, we're the only people that are on the YouTube streaming.
I know. So here's the thing that's actually interesting too. Take it with a grain of salt because it really isn't confirmed yet, but we did gap down. So bearish imbalance. Could this be setting our new recent range, right? So we took out those highs, of course, with what price run? Low to high. Do we start to regress down to that 154? Possibly. That's ultimately, do I know this range is set? Not necessarily. No higher time frame imbalance is formed completely, right? If we're to rip tomorrow, then it's out the window. So again, that's another situation why I do not like to play earnings. I think it's just a waste. You can make money intraday. You don't need to do it when when you have no control over the contract. I think it's just kind of silly. But low, high, lower, low. You also have a bullish breaker here. I know that was just kind of the theme of tonight, so I wanted to identify them as much as I could. But what else? Are there any other banks that you want to look at? JPM, you said tomorrow. What else?
JPM, Wells Fargo, BlackRock, Bank of America. Specifically,
Wells Fargo, same situation where you just actually swept. So ironically, this is something that we can. I know this is a huge range, but there's your discount retracement, and the model wouldn't complete on Wells Fargo until 60.30. What was the other one you said?
BLK, BlackRock. BlackRock, continuing.
I have this most recent range map, but if we look at the overall like all-time situation here, like look, and okay, this was the run that broke it. Did we get a retracement into the discount? No. Did we get into a retracement into discount? No. This is the bearish breaker. High, low, higher high, retracement down. this is something that's worth noting, especially as now we're approaching it. You also have 2 bearish weekly imbalances inside that bearish breaker. So, we did kiss it right here with that high on BlackRock, but this is your current range and the most recent price run from low to high that took out these highs right here. Do we get some sort of retracement down? That's the question. So really, after tomorrow's earnings report, I think we'll have a good idea on the direction of banks moving forward, which is helpful. But again, I really, really don't think you need to jump the gun on earnings and try to play. This is also something worth noting. Look how it held. So is the range set here? I don't know, maybe, right? There really wasn't any bearish imbalance that formed in this situation here. And the fact that we're in a bullish trend and we also held on to previous buy side liquidity, that's very interesting to see. I know something came out today. I don't know if Unusual Whales posted about it or what, but they posted something about BlackRock. That they're anticipating over a higher time frame where they think that they're going to reach in terms of assets under management or something like that. So I don't know. We'll see.
Yeah. There was. Yeah, so we talked about the other day in YouTube. We talked about PDD took all-time highs, or as far as market cap goes, on the China exchange.
PDD.
Yeah. No. Oh, well, I was just saying in general. So PDD took the highest market cap for the China stocks. At open, Microsoft actually passed Apple for the first time in a while. At close, Apple's back above Microsoft, but Microsoft at open was market cap was above Apple.
I saw that, and I think that's kind of what we're gonna see moving forward. I don't think that there is any any sort of innovation in terms of Apple. And I got a Windows PC, and this thing is incredible. This thing moves so quickly. I know it's got all these, like, it's got the NVIDIA chip, it's got the AMD stuff too, but it's elite.
Yeah. So, wait until I build my computer.
You're gonna do one too? Yeah. It's so hard for me to even, like, I haven't really opened up the laptop since the Mac. Yeah. But
I'm thinking I'm gonna start with a Mac Mini, and then I'm gonna pull the Mac Mini apart, and then put a NVIDIA chip into it, because I actually really do like iOS, Apple iOS software. So I will kind of keep the base computer like a MacBook, and then just turn it into like a computer, because that's the biggest problem is Apple puts absolutely zero into their graphics cards, and that's why you get the performance issues that you get.
Right. Yeah. I mean, it is what it is, I guess. But just briefly before I sign off here, here's RTY. Russell Fati brought this one up as well. If we look at the overarching range, what was the start of the price run that took out these highs right here? You can look from that perspective right here. No discount retracement at all until here. Is there an imbalance here? Yep, you have a bullish volume imbalance right there. Held on for dear life. Here's a bullish order block as well. And we shifted short-term market structure. I think it was last week or 2 weeks ago. And now from this point, you look and you'll notice that our most recent price run from low to take out this high and shift market structure bullish, we are in a bullish breaker. The theme of the night: low, high, lower low, break above that high. Currently in it. I like it. Going into this year, I'll show you really quickly. I know we're running long here, but if we were to look at IWM, even let's just see, just for shits and gigs. But here's your low to your first high that took out these highs here. I'm sorry, this is relatively equal. No good. We continue on. There's your high. There's your retracement into discount. Here is your bullish imbalance here. So that's why, like, literally on Jan 1, I tweeted, like, here the Russell, like, because it does have a lot more room to complete the model here. It never has since COVID. You also notice this here. So in order to complete the model in this situation, even if you say, oh, that range no good, okay, well, same situation, low, high, retracement into discount, bullish imbalance, check, and your high would be 244. That would complete it. Again, this is a yearly time frame, so it could take a while, of course, but that's why I was just throwing it out there. Year of the Russell, we'll see. Go back and look at the end of the year, but so yeah, I mean, I think that's all. Katie, you got anything else, or are you all good?
No. If I had to make a bet though, I would bet my money on mid caps over Russell, but that's just my.
Yeah, no, I feel
Just because we had such a large run in the top 7 names, give or take, in tech last year. Kind of really expecting everything else to either catch up or the top 7 stocks pull back. I'm not really expecting the top 7 stocks to pull back. So
right. All right,
no,
well,
don't have anything
I'm
else.
calling it quits. So thanks for popping on, man. And everybody else, take care. Good luck tomorrow. We'll talk soon. I don't know if I'm going to stream until Sunday night, so if not, I'll see everybody then.